The Power Ministry said on Wednesday that state-run PFC and REC have reduced their lending rates across all types of loans by 40 basis points, a move that will help power utilities raise loans at cheaper rates. The power sector non-banking financial companies have already been offering short-term loans at 6.25% interest rate. In order to give a boost to renewable energy, where long-term funding is required, rates have been revised to as low as 8.25%. The reduction in rates has been possible due to lower cost of borrowings by these organizations in the past year or so, the Power Ministry said in a statement. Power Minister R.K. Singh commended the continued efforts by both the NBFCs, PFC and REC, to reduce rates and remain competitive. He emphasized that continued reduction of lending rates by REC and PFC will help power utilities borrow at competitive rates and invest in improving power sector infrastructure, thereby benefiting the consumer by way of reliable and cheap power. In October last year, Singh directed PFC and REC to explore cheaper avenues for raising funds, including through offshore sources, besides focusing on ensuring that the power sector value chain gets access to cheaper funds, especially the renewable energy segment. In the last year, both companies have reduced lending rates cumulatively by up to 3%. They had cut their lending rates by up to 2 percentage points, with effect from April 1, 2021. In April-November FY22, PFC sanctioned loans worth around 14,940 Indian rupees crore and disbursed 8,313 Indian rupees crore. In FY21, the Maharatna company had sanctioned 33,840 Indian rupees crore of loans, out of which it had disbursed 20,031 Indian rupees crore. REC, on the other hand, sanctioned loans worth around 12,627 Indian rupees crore and disbursed 11,585 Indian rupees crore during April-November FY22. In FY21, it had sanctioned loans of 42,844 Indian rupees crore and disbursed 19,917 Indian rupees crore. At present, the government holds 55.99% stake in PFC, while PFC in turn holds a 52.63% stake in REC. They act as nodal agencies for flagship schemes such as Pradhan Mantri Sahaj Bijli Har Ghar Yojana and Deen Dayal Upadhyaya Gram Jyoti Yojana. They have also been nominated as nodal agencies for the recently launched revamped distribution sector scheme. Rocketane, a US/Chennai-based customer onboarding innovator company, has raised $18 million in series of funding round. It was started by 3 former executives of another US/Chennai-based and NASDAQ-listed company, Freshwork. The Series A round is being led by previous Asana investor, 8VC, with additional funding coming from Nexus Venture Partners, Matrix Partners India, and prominent angel investor, Gokul Rajaram. The funding announcement on Wednesday comes just 7 months after Rocketane announced its seed funding round, bringing total capital invested to $21 million, said a press release. Proceeds from the current investment will be used to expand product offerings, accelerate marketing, and grow the Rocketane team, the release said. This funding round follows on the back of very strong early customer growth, and validates the market pull in the category as well as the clear product leadership position we've established, said Rocketane CEO co-founder, Srikrishnan Ganesan. The idea for Rocketane grew out of the founding trio's own problems with onboarding customers for FreshChat. Srikrishnan Ganesh, Deepak, and Vignesh had built Kanoder, an in-app messenger that was acquired by Freshworks and relaunched as FreshChat. Rocketane was #1 product of the day on Product Hunt the day it was launched and has since been growing rapidly. The company's global customers include LinkSquares, Parcel Lab, Release Hub, AppQs, ContractPod AI, and B2B companies in India like ChargeBee, Delivery and Yellow.ai, the release said. With the number of COVID-positive cases going up sharply, some state governments have called for reducing the gap between the second dose and precaution dose to 6 months from 9 months. The Andhra Pradesh and Telangana governments have asked the union government to make it easier for people to get the booster dose early and reduce the number of serious cases and resultant hospitalization. Incidentally, a study conducted by the Asian Institute of Gastroenterology has found that at least 30% of the people had lost immunity 6 months after receiving the second dose. The study was conducted on a pool of 1,636 healthcare workers who were fully vaccinated. People over 40 years with comorbidities such as hypertension and diabetes are vulnerable and will require a booster dose after 6 months of taking the second dose, the study recommended. Andhra Pradesh, which reported a positivity rate of 25% on Wednesday with over 10,000 cases, felt that reducing the time lag will help more people get the booster dose and protect themselves against the infection. Echoing AP's views, the Telangana government, too, favored relaxing the criterion. It even wanted the union government to reduce the lag to 3 months for healthcare workers, considering the fact a large number of doctors, nurses and technicians are getting infected in large numbers in the third wave. The government should give a booster dose to all the people above 60 years of age, including those without comorbidities, he said in a letter to Union Health Minister Mansukh Mandavia. The AIG study found that about 70% of the population that are vaccinated, particularly the younger population, are able to retain COVID antibodies till 9 months after getting the second dose of vaccine. The remaining 30%, particularly those 40 years and above with comorbidities, do not retain enough antibodies to tackle the infection. They may be at a higher risk of SARS-CoV-2 infection, and these individuals should be prioritized for a booster dose after 6 months, said D. Nageshwar Reddy, chairman of AIG Hospital. This has lent credence to the argument that the gap between the second dose and booster days should be reduced to 6 months. We are seeing a surge of infection across the country. Fortunately, the severity of the disease is mild because of multiple factors including the effect of vaccination, the intrinsic character of the variant itself, and natural immunity amongst the population, he said. We found that almost 30% individuals had antibody levels below protective immunity level of 100 AU/ml after 6 months, he said. These individuals were majorly above 40 years with comorbidity. Of the total sample size, 6% did not develop any immune protection at all, he said. The results indicate immunity levels wane with age. Younger people have more sustained antibody levels than the elderly population. At present, the 9-month gap for prevention dose benefits 70% of the population who can retain enough antibody levels beyond 6 months, Reddy felt. Bajaj Auto, India's third largest manufacturer of two-wheelers, posted 16.69% drop in consolidated net profit at 1,429.68 Indian rupees crore for the quarter ended December 2021, weighed down by high input cost and drop in high-margin export volume. The corresponding period of last quarter saw the company's consolidated net profit settle at Indian rupee 1,716.26 crore. Total income rose to 9,369.31 Indian rupees crore, a growth of 1% compared to 9,279.06 Indian rupees crore posted in the same period last year. Earnings before interest tax, depreciation and amortization margin was at 15.6% for the quarter, which was much lower than the historical highs of 20% that the Pune-based company was able to maintain consistently. Total volumes, comprising two-wheeler and three-wheelers in export and domestic segments, fell 10% to 1.18 million units in the December 2021 quarter against 1.30 million units in the same quarter last year. While export volumes were consistently higher than domestic volumes, they were 4% less than same period last year, primarily on account of fall in demand from Sri Lanka, which is one of the biggest overseas markets for Bajaj Auto. Domestic two-wheeler volumes were 20% lower at 471,284 units in the December quarter against 585,469 units sold in the same quarter last year. The company, however, claimed to have improved its market share to 19.2% from 18.6%. Consistent rise in product prices and weak sentiments, especially in the rural markets, have led to the fall in demand for two-wheelers across the industry. While domestic demand is not expected to see much reversal in the coming months, Bajaj Auto hopes that export volumes will touch record levels by the end of this quarter. At the standalone level, the company clocked net profit of 1,214.19 Indian rupees crore, a fall of 22%, against 1,556.28 Indian rupees crore clocked in the same quarter last year. Rationalization of taxes is likely to have a multiplier effect and stimulate growth in the aviation sector. High taxation, particularly indirect taxation, in a sector which does not have 21% margins, is resulting in it being chronically ill, low-cost carrier Indigo Airlines said on Wednesday. The airline's top management is expecting the upcoming budget to take some immediate action on long-standing problems of taxation, bringing ATF under the GST ambit, elimination of customs duties on repair parts, among others. According to Ronojoy Duta, CEO, Indigo Airlines, civil aviation pays 21% of its revenues to the government as indirect taxes with very little input credit. It is an unreasonable proposition to expect that the industry should earn a 21% margin just to pay taxes to the government. This proposition is resulting in an industry that is chronically ill and is unable to live up to its true potential of boosting commerce and employment. We would request the Ministry of Finance to take some immediate action to address this long-festering problem. Central excise taxes on fuel should be reduced from 11% to 5%, ATF should be brought under the GST, custom duties on repair parts should be eliminated, he said. A rationalization of taxes will result in explosive growth for aviation, which will have multiplier effects throughout the economy, stimulating commerce and employment, he added. Medall Healthcare, an integrated diagnostic service provider, is planning to open 300 to 400 centers across South India during 2022. Chennai-based diagnostic chain said that apart from penetrating into small towns in Tamil Nadu, Medall will also be expanding into other South Indian states such as Karnataka, Andhra Pradesh, Telangana and Kerala. Positioned as a franchisee model, the centers will be in multiple formats, including collection centers, mini wellness centers, full-service centers, lab collection centers, and Medall Care Center. Medall already has over 7,500 customer touchpoints in 7 states and more than 70 districts, 22 NABL-accredited labs. It claims to have served over 50 million customers and administered over 150 million tests. By expanding across South India, we aim to offer the best-in-class diagnostic and preventive healthcare services with a view to prevent the onset of the virus and other ailments and to enable people to stay in their best of health, Arjun Ananth, CEO, Medall said. By opting to go in for the franchisee model, we are offering an entrepreneurial opportunity, especially women, to own and operate world-class diagnostic services and offer medical aid with care and compassion, he added. The diagnostic chain said it will target Tier 2 and 3 cities where the need for diagnostic services is felt much more than metros and Tier 1 cities. Calendar year 2022 will be significant for Microsoft in India as it charts the initial progress of its metaverse plans and new product launches. The company told Businessline that its Mesh for Teams metaverse offering will go live in the country in the first half of the year. Its metaverse building block Microsoft Mesh complements its mixed reality hardware HoloLens 2.0. The company has also announced a public preview of 2 solutions in India, the Microsoft Mesh app, where you can view in 3D, and the AltSpace VR, which will be used to hold meetings, town halls in virtual reality and 2D mode on PC. Microsoft India, interestingly, is also getting vocal about creating an open ecosystem for its next phase of metaverse-backed growth. An open ecosystem might become a prerequisite for building cross-platform experiences once metaverse becomes a mainstream reality. Rajiv Sadi, Chief Operating Officer, Microsoft India, told Businessline, as we develop for a metaverse-powered future, we have a foundational belief in open ecosystems, where identities and content easily flow between experiences, regardless of platform, and should not be controlled by a platform broker. We believe this is necessary to fully unlock the promise of the metaverse. What we have announced so far is our metaverse platform called Microsoft Mesh, which will enable developers in the ecosystem to start building solutions for the metaverse shared digital workspaces. Metaverse Wave. Metaverse features are being integrated differently into the various verticals of Microsoft's business, says Praveen Melikarevu, Country Head Business Applications, Microsoft India. If I look at Metaverse, it is manifesting itself in different ways in different parts of the Microsoft cloud stack. On the Azure side, there's mesh. On teams and productivity, there's metaverse use cases, he told Businessline. And Dynamic Suite is still a bit old school till now and primarily focused on solving some critical problems around businesses over remote access. For instance, help someone repair a complex set of machinery sitting 10,000 kilometers away. This is where it uses HoloLens to spot where the machine is. That's where Dynamic is adding value through technology for use cases like maintenance, services, training, and audit, to name a few, and how to do this remotely. This is gaining traction during the pandemic, Melikarovu added. According to Saudi, Microsoft Cloud provides comprehensive set of capabilities to power metaverses that blend the physical and digital worlds by connecting and creating digital twins of places, people and things, and enabling collaboration in mixed reality. Our IoT capabilities enable customers to connect to physical assets and create their digital twins in the cloud. Our AI capabilities help reason on this data and enable natural interactions using powerful speech and vision machine learning model. Microsoft Mesh transforms collaboration and connection by creating a shared sense of presence from anywhere, on any device, he said. Benchmark indices closed around 1% lower on Wednesday as selling pressure continued for a second consecutive session. Market opened on a weak note, tracking negative global cues as rising treasury yields across the globe indicated interest rate hikes sooner than expected and a surge in crude oil prices. Markets slipped further during the day. Indices closed lower, dragged by IT, FMCG and select financial. The BSE Sensex closed at 60,098.82, down 656.04 points or 1.08%. It recorded an intraday high of 60,870.17. The BSE Sensex slipped below 60K during the day to record an intraday low of 59,949.22. The Nifty 50 slipped below the 18,000 mark to close at 17,938.40, down 174.65 points or 0.96%. It recorded an intraday high of 18,129.20 and a low of 17,884.90. The market breadth remained in favor of the decliners with 1,827 stocks declining on the BSE, as against 1,579 that advanced while 89 remained unchanged. Furthermore, 370 stocks hit the upper circuit as compared to the 359 stocks that were locked in the lower circuit. Besides, 337 stocks touched a 52-week high level and 16 touched a 52-week low. FII have yet again turned sellers, further impacting investor sentiment. S. Hariharan, head, sales trading, MK Global Financial Services said, a rise in crude oil prices to 7-year highs and continuing high inflation prints globally have driven global bond yields to near pre-COVID levels, while US FOMC participants have indicated in separate interviews their intent to act decisively to bring inflation under control. As a result, risk assets have been under pressure this week, reflected in net selling of $800 million by FIIs in Indian markets the last 5 sessions. While results from large caps declared so far have been strong and meeting or beating expectations, price moves in reaction to results have been very weak and point to excessive prepositioning and a high bar to beat priced-in expectation. Market attention would turn towards budget expectations for infrastructure and housing sectors in the coming weeks as a major focus area of fiscal spends in the coming year, Hariharan added. Globally, risk sentiments took a blow as rising inflation resulting in elevated bond yield along with the ongoing geopolitical tensions and surge in oil prices weighed on investor confidence. This along with consistent FII selling forced the domestic market to trade in favor of bears for the second consecutive day. The UK's inflation rate rose to 5.4% in December from 5.1% in November owing to rising demand, surging energy costs and supply constraints, said Vinod Nair, head of research at Geojit Financial Services. ONGC, Tata Motors, UPL, Coal India and Maruti were the top gainers on the Nifty 50 while Infosys, Shree Cement, Asian Paints, Adani Ports and Hindustan Unilever were the top loser. On the sectoral front, while IT, FMCG, realty and financials, barring PSU bank dragged, metals, auto and oil gas gain. Nifty IT was down 2.13%, while Nifty FMCG was down 1.06%. Nifty Financial Services was down 1.08%. Nifty Bank and Nifty Private Bank were down 0.44% and 0.65%, respectively, while Nifty PSU Bank closed 2.21% higher. Nifty Auto closed 0.71% higher, while Nifty Metal was up 0.8%. Nifty Oil Gas was up 0.54%. As for broader indices, the Nifty Midcap 50 was down 0.21% at closing, while the Nifty Smallcap 50 was up 0.26%. The SP/BSE Midcap was down 0.34%, while the SP/BSE Smallcap was up 0.03%. The Volatility Index rose 0.21% to 17.82. Cryptocurrencies including Bitcoin, Ethereum and Dogecoin, which had attracted lot of interest in 2021 due to the stellar rally in prices, are currently passing through a rough patch. Bloomberg Galaxy Cryptocurrency Index, which is designed to measure the performance of the largest cryptocurrencies traded in US dollars, is down 40% since the peak recorded in November 10, 2021. The index has lost 11% since the beginning of 2022. The trouble for cryptos began when China clamped down on private cryptocurrency trading and mining in September last year. Talks about Indian government planning to ban transactions in private cryptocurrencies towards the end of last year further roiled sentiment. Regulators in other countries, including the US, are also discussing ways to regulate the trades and check illegal money transfers through these instruments. As the regulatory heat began building up, most cryptocurrencies began sliding lower. Bitcoin, the most popular cryptocurrency, is down almost 39% since the peak of $68,991 recorded in November last year. Other popular cryptocurrencies such as Ethereum, Dogecoin and Litecoin have also lost more than 35% from their 2021 peak. The party in the private cryptocurrencies has also been impacted by the U.S. Federal Reserve's change of stance in the December policy meeting. The Fed revealed that it will be hiking interest rates 3 to 4 times in 2022, by 25 basis points each time. The FOMC minutes further revealed that the Fed will also begin shrinking its balance sheet in 2022. These actions spell bad news for risky assets such as cryptocurrency. 1. It will increase the cost of borrowing for leveraged trade. 2. The amount of surplus available in the financial markets would shrink with Fed not rolling over the maturing government bond. 3. Higher interest rates result in fund managers reallocating funds to fixed income. The Indian government has not been too supportive of private cryptocurrency investment. Tax authorities cracked down on crypto trading platforms including WazirX, CoinDCX, Bayucoin and UnoCoin, demanding GST at the rate of 18% on the commission charged by these exchanges early this month. More than 100 rupees crore was collected from these exchanges as tax dues, penalty and interest. While the above pertains to crypto exchanges, investors are still in the dark about how their gains or losses will be taxed. There are several complicated questions that the cryptocurrency bill that will be tabled in the parliament needs to address. What is the nature of cryptocurrency? Are cryptocurrency trades legal or illegal? Are they assets under the Securities Contracts Regulations Act? This needs to be spelt out clearly before the manner in which the transactions are regulated and taxed can be decided. 2. Will the income from cryptos be treated as speculative income or non-speculative income? If the income is non-speculative, then capital gains tax could be charged on the gains, whereas if these are treated as speculative income, then can be taxed at the corporate tax rate. 3. Should they be treated as commodities, and thus levy GST on the value of purchase and sale? The bigger worry is money laundering and other illicit activities taking place with cryptocurrency. These need to be checked. The questions are many and it is hoped that the FM has some answers on February 1. Top U.S. airlines on Sunday wrote to the Biden administration stating that 5G services deployment around airports should be banned because it may interfere with sensitive airplane instruments such as altimeters and significantly hamper low-visibility operation. Frequencies within the C-band being used for the 5G services are near airwaves used for aviation communication. Following this, several airlines around the world including Air India have curtailed flights to the U.S. As a temporary measure, AT&T and Verizon voluntarily limited 5G deployment near certain airports. What is 5G network? 5G refers to fifth-generation mobile network. When rolled out, it will represent a quantum leap over the current 4G mobile network. 5G networks could deliver 10 times faster internet and more than 10 times improvement in latency over 4G. Ultimately, 5G is expected to reduce latency to 1 millisecond. 5G has the potential to unleash a whole range of services and capabilities that are not possible today in terms of scale and precision: mass deployment of autonomous cars, using drones for delivery, remote healthcare, precision agriculture, virtual reality, and industrial automation. This is expected to pave the way for a whole new world of connected devices communicating with each other. Are the concerns raised by U.S. airlines specific to that country? 5G is being rolled out in over 40 countries, but so far only the U.S. airlines have raised concern. Generally, all airlines ask passengers to switch off their phones during takeoff and landing because of concerns related to interference with avionics. But so far, this concern has only been on paper because mobile operators and airlines have been using different frequency bands. Therefore, there was no real risk of interference. But in the US, since both telecom companies and airlines use the C-band, there could be a higher probability of interference. There have been discussions over how the transition should take place in the US for years, but the telecom companies and the aviation industry are yet to arrive at an agreement. Will 5G impact India's aviation and other sectors that use spectrum? India is yet to auction 5G spectrum, and services are expected to be launched only by next year. So far, none of the airlines have raised any issues with the proposed plan for spectrum auction. But national broadcaster Prasar Bharati, which uses it for its services, has raised objections to the use of a specific frequency band for 5G. India had seen similar discussions when 3G and 4G services were rolled out. At that time, the armed forces and the space agency had claimed rights to specific frequency bands. Typically, these differences are sorted out by the TRAI and the Wireless Planning and Coordination Wing of the Department of Telecom before the launch of service. Hence, it is surprising that the Federal Communications Commission in the U.S. has not been able to find a solution to the standoff between airlines and telcos in that country. When will flights to the U.S. resume a normal operation? The U.S. administration under Joe Biden is trying to build a consensus between airlines, telecom companies, and FCC on resolving the dispute over the rollout of 5G service. But it is not yet clear how much time it will take for the issues to be resolved. Meanwhile, the airlines may resume normal operations soon now that the telecom operators have voluntarily decided to stop 5G deployment near airports as a temporary measure to assuage concerns of the aviation industry.